Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, and it's finally Friday. Been a long week this week. A lot of whip in the markets. For all the movement in the markets, when Shay ran our index numbers, I was surprised that really the NASDAQ was down 3/4 of a point, out to the Dow being down about 1.5%. Seemed heavier to me as we were trading through the week, but goes to show what kind of volatility we had up and down. A lot of it driven by what we're seeing in the fixed income markets. Quick comment on that, and then I'll mention a couple of things we did equity-wise. Fixed income, you saw 10-year Treasury trade all the way down to 150. What that's done is create some real value in the Muni market again. If you recall, we talked about this probably 5-6 months ago. You have the 10-year Treasury down at 150, backed up to maybe 155 today. Along that same 10-year pattern, we're seeing munis in the 280, 290 area. That's a ton of value on a net basis. That's before you factor in the tax savings there. So regardless of rates coming down, we still like to look at where is their value in security to security. And again, we're seeing a ton of value in the muni market. Equity-wise, what did we do this week? We did pick a nibble. US ETF, we were 20% cash coming into the week. We did add 3 new positions into the portfolio. Clients, you saw that in your confirmations. It took us down to 10-11% cash in US ETF. We did take 2% off of our gold miners position. Gold miners were 6% of the portfolio coming into the week. We had a monster run over the last 3 or 4 months there. We took that down to 4%. So not a large move there, but just taking something off. Anytime we sit in a commodity-based equity, we do want to tend to trade it a little more than own it. We don't have a ton of cash flow in those equities underneath in the basket underneath the security symbol. So what do we have going on heading into next week? Probably more of the same. The bond market's dominating action right now. We don't want to get too caught up in the bond market. I never met so many experts on yield inversion until the last 2 weeks. Usually, if everyone's an expert and everybody's watching something, that information gets degraded. It may not be as important as it was 5, 10, 15, 20 years ago. When everybody's watching the same information, it slowly loses its significance in a trading scenario. The economy, that's another situation, but we don't trade the economy. That's something that often gets talked about as 1 and 1A, the equity market and the economy, the fixed income market and the economy. We don't trade the economy. We trade fixed income securities and equity securities. They trade differently than the economy. So we try to fight against making that mistake and having what's happening in the economy dominate our trading thinking. One last point. On Thursday, even though it was a flattish day in the market, the equity only put-call ratio hit 0.98. Why is that significant? Let's go back 3 weeks ago to our Friday call. One of my concerns about the market, and we try to look at what do we like, what don't we like. What I didn't like the last week of July was the put-call ratio heavily favoring call buyers. The most speculative part of the market, the equity-only put-call ratio had sunk to levels that in the past had meant that the market was running out of steam. You had speculative buying of calls. Well, Thursday, you had speculative buying of puts. Was it extreme? No. We hit 1.06, 1.08 last December. That's extreme. Market turned around off that in December and moved almost in a straight up direction for 30 days. But a 0.98 is showing some degree of fear. So we'll keep an eye on that next week. While I'm on that, let me mention that there wasn't enough in terms of our fear ratios and indicators to create a buy signal in our quant strategy this week. So we remain in cash there. As you know, we've been in cash for, about 3.5 months. You know, we're at 2% on those treasuries. In tough downdrafts, we'll take that. We'll keep looking to see what those indicators tell us from a short-term trading standpoint. Everyone have a great weekend. We'll see you next Friday.